Hi everybody, it's Tuesday and we're back on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. Jim, stocks are up, rates are up.
There's some Dow stocks that are really killing it. With rates up, obviously by JP Morgan, with Disney tonight, everyone's very excited about Disney. Remember, if you want to buy Disney, you buy half now and you buy half later, because we were looking at it from the point of view of an acquisition that's going to be far off and may need even Chinese approval. A lot of people still buzzing about this Goldman Sachs piece about conversations we're having with the $1 trillion question with clients, and that is about how you shouldn't be thinking about Apple, you should think about buybacks. We are still focused on this because I think one of the reasons the market is up is that there, as much as people thought that a lot of the money was going to go to CapEx from the tax code changes, it is going to buybacks. And look, there's no sin to that, because the idea is you go to CapEx, you go to hiring, you go to, in the usual, the third choice is buyback dividend boost. We saw that in Illinois 2 Works the other day. That's an action alert name. But there is just a lot of money coming in. And what happens is if you do buyback, it puts a floor to the market, while meanwhile the wave of index money comes in. And it's very hard for the market to crater unless you have an exact cause about why the buybacks would drop. I mean, for instance, you take a look at Apple today. People are selling Apple because of a theory that they might buy back stock. Might be boycotted. They'll buy back stock if it really gets hammered. That's what's been going on. A stock that gets hammered, companies stand underneath. And that's a major reason why we could be continually up, even though we should have sold off by now. Honestly, we should have sold off by now. And I really think that when you, this Goldman call by my friend David Kostin is a big one. And it's going to keep resonating because August is a big month for buybacks.
You mentioned Apple. The CFO actually told you that there are limits into how much they can actually buy.
Mean, there they are. They can't. There's the government will not let you buy a little bit more than a certain percentage of the volume. Now, again, I think that this Apple, you see a story in a Chinese newspaper about how they're not paying people enough. That would be the prelude to a boycott. I am convinced that Apple is not going to be the subject of a boycott. Remember, we have Apple and Starbucks. Starbucks tied up with Alibaba. I would love to see Apple tie up with someone that would make it so they're a little more immune, but they are a huge employer in China. And if Apple comes down, the company will be in there buying.
Well, that's the second straight day of harsh rhetoric from China.
Well, no, it's
on
every
trade.
day is harsh rhetoric. There's not a day. And I think that, look, I do not like the way the Chinese steal our intellectual property. I don't like the way the Chinese make it so you have to have joint ventures. We have to have a goal in a trade war. We can't just have a trade war. We have to have something we want to happen. And what is disconcerting to me about the trade war, I like the United States fighting back, is what's the goal? We got to keep sight that if we have goals, then we can win. If we don't have goals, then all we do is fight. And I think all we do is fighting is the reason why it's so difficult for certain industrials to go higher. But if you have a defined goal, and the goal is such that the Chinese can agree to it, then what you end up having is a win-win. And I think that that's what people want. We don't need necessarily a win-loss. Some things I'm following, for instance, here, you take 5G. 5G is something that the Chinese are ahead of us on, okay? So that's bad. We have to maybe let T-Mobile merge with Sprint, new position of mine, because we want to fight the Chinese on a level playing field. It's not been level. We want a level playing field, but where we can spend more to dominate, we must do. But I am just saying we do not want a situation where we're in an endless war with no goal other than to be in an endless war, because that's too much like World War I. We don't want a World War I stalemate, because then whole nations never come back.
And I guess the goal right now is to get them to stop stealing our intellectual property and narrow that trade deficit a little bit.
Well, it's stealing intellectual property and to stop the joint ventures, which lead to stealing intellectual property. And of course, to not dump. If they dump things like they've been dumping steel through all other countries and then it ends up being dumped here, then Nucor gets hurt, Nucor Action Alert's name. But I do think that we have to recognize that they have more to lose than we do. But that's not the goal. The goal is not to have more to lose than we do. And the goal is not to make it so everything they sell here costs too much. The goal is to win on those points that I just mentioned. And if they go backsliding and they start doing the joint ventures, getting steal our property, then we can ratchet things up. But you just got to need a goal. Anytime you are in a war, there's got to be a goal. It can't just be total annihilation. Now, it is true that in World War II, we decided as a nation that what has to happen is total annihilation. It was we could not. We had to have unconditional surrender, both the Japanese and the Germans. We can't go for unconditional surrender because they're not going to surrender. we need to go for things that are big wins for American companies.
And I think former Nucor CEO Dan D'Amico would agree with you on the dumping issue.
Well, I mean, Dan might say to me, Jim, we have to win the war. And I love Dan, and I there's very little discipline between me and Dan. I just want goals. I want to clearly define goals. And the president needs to clearly define goals in order to be able to make it so that there's a good chance that we do win the way that I want to win, which is major changes in the way the Chinese do business. But if the goal is war, then that's too much like what we've seen at times where there's a stalemate. And we can't have a stalemate. We want a victor.
All right, Jim, a pretty positive analyst note from Morgan Stanley on Alphabet. They're saying Waymo could be worth $175 billion.
I read that piece. I've got it here. I mean, I talked about it in Stop Trading, and I think that people have to recognize that Waymo's here. Okay, Waymo's a fourth quarter autonomous driving rollout. Waymo is clearly the leader, not Tesla, but Waymo, and they can license that. Remember, Fiat, the late great Sergio Marchionne. I mean, he had the deal with Fiat, and Chrysler. I'm sad about what happened with him, and I feel that that they've been the big partner. Chrysler's been the big partner, Fiat, and I think that now it's going to broaden. I think that the time is right. The 8 million miles logged, the safety issues right now of autonomous versus just a regular driver are so clear cut that the world is thirsting for this. I mean, we have the chance to lower accidents and fatalities. We have the chance to be able to make it so that elderly, handicapped can drive. We have a chance to be able to make it so a lot of people have more mobility and a lot more safety. And I think that even 3 years ago, we didn't feel that way. Waymo is a major driver. Don't forget, Alphabet also has fantastic momentum coming from Facebook advertisements. There's so much good that's happening at Alphabet that people aren't even talking about. Alphabet moving into China, which is not what was expected, but they're doing it. Alphabet is probably my favorite big cap stock right now.
And it's a holding of Action Alerts Plus.
Certainly, we've got a big conference call coming up on Thursday. It's going to be talking more about sell disciplines, giving you some rules for selling. But after Apple's moved this much, my focus is on Alphabet.
Okay, this is Jim's monthly investor call Thursday at 11:30 a.m. on ActionAlertsPlus.com.
I think it'll be fun-filled. Talk about some new names. Talk about basically what we did wrong, because that's a major focus for me. Nobody else does that. I saw it on Twitter. People like the candor. The candor's painful. I mean, it's painful to sit there for an hour and talk about what a dope you are. But if you're going to learn from your mistakes, which was the hallmark of my hedge fund, then you're going to do better. Remember, your wins take care of themselves. It's the losses that you must contain.
I mean, coming from someone who used to wear a Post-it note on their forehead when they made a mistake.
Let's have some discipline.
Okay, Jim. Meanwhile, Carl Icahn slamming that Cigna Express Scripts deal.
I have Mr. Gردani on from Cigna. Now, Cigna is a win. It's a win. It's a win. Alone, not alone, it's a win. But you see, the problem is United Health, which is a major holding for Action Alerts. United Health has both data, Optum, and it has obviously tremendous health insurance business. And Cigna needs a similar offering, and Express Scripts can give it to them. So I find Icahn's view quizzical. I want that deal to close.
Icahn also saying that Amazon is a big threat to Express Scripts.
But everybody knows, I mean, this is one where you look at Walgreens where it is, and CVS where it is, and Express Scripts where it is, and you come back and you say to yourself, okay, listen, Amazon can't destroy everybody. If you sat there and you sold AutoZone at $600, if you decided that Advance Auto was never going to go anywhere, if you decided that Macy's had to be destroyed, if you decided that Kohl's, which they ended up partying with Amazon, is dead, then you look at, by the way, Federal Realty, look at the way Tanger's come back, look at Simon Property. What you realize is that, Kimco, that while Amazon is incredibly powerful, really amazing, there is a level with which it can just destroy and lay to waste everybody. And I just don't think it can, from these prices, it reflects total, let's say, destruction of the earnings power. And I don't think that's possible.
And you can see that in Etsy this morning. I mean, they're not worried about Amazon.
Etsy is the opposite of Amazon. I mean, Etsy is very much involved with crafts. It's a perfectly curated site. I am a huge Etsy fan. I'm just going to state it. I'm from Brooklyn, and Etsy is our great employer. and I have spent time with Etsy, and they are very motivated to make a lot of money. They raise prices, and the pricing stuck because there's no other place to be able to sell these crafts. It's a really good story.
Okay, Jim, who do you have coming up on Mad Money tonight?
I have Logitech on tonight. I mean, esports is a dominant theme, and Logitech's involved with Turtle Beach is the direct play because they do the headsets. Let's see what Logitech has to say, but they were the first one to introduce me to esports, and I think it's a great educational story.
Okay, that's tonight, 6 p.m. Eastern on CNBC. We have more stocks with Jim coming up in our ActionAlertsPlus.com video. Please join us there.